you are afraid of interest rates, but you're also like, I agree, I see this as an opportunity and I don't want it to slip through my fingers, then execute. Do what you need to do to get this dream off the ground. And then a year, 2 years from now, refinance when interest rates are better.
What's up, everyone? Jonathan here with the Venue RX, and on this show, we document and share best practices around building, owning, and operating world-class wedding venues. And I am really excited to have this guest on the show today. You know, we've been having so much fun with our venue owner series, which has been a total blast, talking to venue owners and kind of getting the day in and day out life of what it's like owning a property and kind of what each one of the properties that we've interviewed feature, you know, packages and pricing and all that good stuff. And just like the stories, you know, everything that those venue owners have done to build that up. But in this show, we are going to be going back and doing one of our original style podcast interviews, and I am so thrilled today to have Lindsay Lucas on the show with me. Lindsay, thank you so much for coming back on, actually, right?
Yeah, thanks so much for having me. I was so excited when you texted and asked me to be on. I had so much fun last time. I'm really excited to be here.
You're listening to the Venue RX podcast.
So I'm so excited to be chatting with you again. You know, we were chatting off air before we clicked record, and I was just like, stop! Like we have to record this because it is so key, I think, to what we're going to be talking about today. And whether you're listening online on iTunes, checking us out on YouTube, where we put everything in video format, and you can see Lindsay's beautiful face. You know, it is important to talk about financing and the permitting process and some of those different things. And that's what we're going to be talking about today. Lindsay, can you kick off our conversation with a bit about you, how you got into the wedding industry, kind of like a short origin story, and then we'll dive into the topic for today.
Sure. Yeah. So my name's Lindsay Lucas. I am a business consultant and coach for wedding venue owners. I got started in the wedding industry many years ago. I think it was 2009. And I got started as a wedding planner and quickly built a team around me and did that for 10 years. And then I'm located in the Houston area. And back in 2016, we were having like this big boom of wedding venues that were popping up everywhere in the Houston and surrounding areas. And whether it was through a DJ friend or mutual photographer that would go out to the new venues, somebody was referring me whenever venue owners would like ask them a ton of questions that they didn't know the answers to. They would say, you need to talk to Lindsay. She's always happy to help. And so lo and behold, they would call me up. I would go and do a site visit to the property and help them as much as I possibly can. It got to the point to where I was just a wedding planner at the time and had no formal education in any of this. I was just answering questions and saying, don't do this, watch out for this pothole kind of thing. And I decided that I would hand them off to somebody. I needed to refer them to somebody that was smarter than me. And I was Googling everyone, and the only venue consultant in 2016 that I could find at the time was located in the UK. And so I was like, you know what? I can't leave these people high and dry, because at this point they had become close friends. And so I hired a business coach and was like, hey, I want to do this thing. It doesn't exist. Are you on board? And she was like, yeah, game on, let's do it. So we built out a business, and a year later I was completely book solid without any like website, social media, advertising, any of it. It was strictly word of mouth. And so I ended up selling my wedding planning firm to focus on this full time. And I've been doing that ever since. And it's best thing. It's just so rewarding, and it's my favorite thing to do.
That's so cool. That's so cool. I love that. And I think something that you're working on that, I don't want to spoil it. I'll let you share maybe at the end of this, but you're relaunching some of the material. You've got a bunch of exciting new things in the work. You said you basically tore everything down to the studs, and you're rebuilding, what you have to offer venue owners. So that's really exciting.
Yeah, thank you. So it started with a rebrand at the beginning of this year, and I went into it thinking, oh, I'll just get a new logo, new colors, pretty fonts. And that turned into this huge snowball of, oh, well, now I need to rebuild services and client experience and operations on the back end so that we can serve our clients better and streamline things and help more people. And then that turned into burning down my signature course, which is the Venue Academy. I built it back in 2018, completely burned it to the ground and am eyeball deep in it currently, rebuilding it. I'm super excited. I'm to the point to where it's like, okay, you need to stop building out more and more modules. I think we're at 73 videos right now. And I'm like, okay, I think it's to the point where it's overwhelming. So we're going to stop and just launch it and see how it goes. So
that's so cool. Well, let me know. We'll definitely promote it to our community. I'm really excited for that. I think there's something special, very special about our community, the community of venue owners, the people who manage venues. Like this piece is definitely a community that I'm excited about. You know, the people that I've chatted with who have reached out about the podcast or have suggested guests or suggested topics. You know, I'm so grateful for that. And as we continue, you know, we're trying to build the subscriber list. So sneak tip, if you're listening on iTunes, please go subscribe on YouTube. We really are trying to build over there to keep reaching new venue owners, and that's the only language that YouTube speaks is like more subscribers. But you know, one of the topics that I have heard repeatedly and really haven't dabbled into because I don't know that much about it is the topic around financing, the topic around permitting, the topics around some of these foundational elements for venue owners. And many of the stories I've heard from folks, you know, they have family property or things like that, so maybe financing isn't as much of an issue. But equally, I've heard from folks, you know, questions like, how do you get financing? And questions about the recession. And I think there's a lot of maybe fear and potential anxiety around kind of that piece, especially if you don't have a property, you know, already in the family, or if you don't have, you know, funds from another business exit or something like that. And so let's dive into that today. Could you go back though and tell me what you were saying right before we got on about kind of what the big movers in the market are doing? Should we be scared of like a possible coming recession or inflation or things like that?
yeah, yes. So I think that it's totally normal for everybody to have fear regarding the current state of the economy. But I don't think that we should live in fear. Obviously, I'm a big believer of that. I'm a big believer of getting your mind right. I know you and I have talked just as friends as far as like mindset and mentality and how to like work through things. So that's a big part of what I put into my business and what I put into my clients' businesses. And I follow a lot of investors, specifically real estate. And if you study what all of the heavy hitters and the big real estate investors are doing and what they have done in a previous recession, they're not scared. I mean, they're making educated decisions, but they're doubling down because they see the current market as an opportunity. Now, we may not necessarily have the funds to play at their level, but if we dial it down and take that same mentality and apply it to our specific situation and say, okay, I may not be able to afford the $10 million property or whatever it is, but I can afford this $1 to $2.5 million investment. The only thing holding me back is my fear of the unknown. And that's really what it boils down to, is fear of the unknown, which is a totally normal, and it's part of human nature, right? Like we talk about fight or flight, and I'm not qualified to talk about psychology by any means, but I just see that there's so much opportunity in especially the next 2 years or so.
Absolutely. When you talk about opportunity, and specifically opportunity for venue owners, is this opportunities to buy properties correctly? Is this like new venues that, you know, are needed in certain areas that you're, you know, feeling are underserved? What is the opportunity? Is it a financial opportunity? Like kind of, you know, pull back the layers there a little bit.
Okay, so much. I have to slow my brain down just a sec. So the first thing that comes to mind is acquisitions. I get emails weekly of current venue owners that are like, hey, ripple effect of COVID has finally hit, or hey, I'm exhausted from surviving COVID, or hey, I am ready to retire, been in the wedding industry 20 plus years, want to spend time with my grandkids. Whatever the reason is, they're ready to get out. And there are so many venue owners that are looking to sell, but they poured their blood, sweat, and tears into this business, some of them for decades, and they don't want to just sell for the value of the real estate. Like, they want to keep their business alive. They want to keep it thriving. They want to hand it off to a responsible business owner. So just the acquisition side of purchasing an existing venue, which there's so much to be said there, right? Like, obviously there's going to be improvements or things that you want to make it your own, but I don't want to say the hard part, but as far as launching a brand new business, building a brand new venue, like, that's been taken care of. So if that's not like your vibe to build new construction or to renovate from the ground up, why not invest in and acquire a property that is already established? Now, obviously, there's some due diligence that, and I won't get into the weeds of that, of things that you need to look for whenever you're interested in acquiring a property, but there's a ton of other opportunities as well. You know, I'm a big proponent of, if you already own land, make that land work for you with a bunch of different revenue streams. A lot of people, as far as the recession is concerned, the main thing, their primary concern is going to be interest rate. And I totally understand it. I'm not going to lie, interest rates are high. Anybody and everybody knows that. I'm a big proponent of the Burr method. Are you familiar with that?
Yeah, through Bigger Pockets. That was actually Bigger Pockets.
Okay, they're my favorite podcast right now. I love them so much.
I love it.
Yeah. Okay, so if you're listening and you're not familiar with the Burr method, it is buy, rehab, rent, refinance, and repeat. Thank you. Yep. Yes.
I love it. That was honestly, listening to Bigger Pockets was one of the things that kind of got us into venue management from staffing. I was listening and I was like, real estate, commercial real estate. What would I do that has anything to do with like commercial real estate and weddings? Wait a second, like, wedding venue, hello. And we already were kind of managing a property at that point, but I'm like, why haven't I put this together yet? And then, you know, we sold the staffing company and then launched into this. But I love the Bigger Pockets so much. Endorsement there for sure.
Oh yeah, they're so great. I'm a big fan of the Burr method. And if you are afraid of interest rates, but you're also like, I agree, I see this as an opportunity and I don't want it to slip through my fingers, then execute. Do what you need to do to get this dream off the ground, and then a year, 2 years from now, refinance when interest rates are better. You know, like, I'm not gonna lie, it's a pain in the butt to refinance. It's a lot of paperwork, especially since COVID. There's extra, hoops to jump through, but it's going to be worth it. I think my real estate mentor said, if you're refinancing, if you can't refinance for a rate that's at least 2% lower than your current rate, then it's probably not worth the paperwork. So there's that little measuring stick to put in your back pocket. But so yeah, the point of that is current interest rates don't scare me.
Okay. So we were talking about financing. We've been talking about, you mentioned due diligence, and I think people would probably be really interested about that side of it. But I want to talk about the due diligence in the acquisition process if you're considering buying an existing venue. But one of the questions that I've got a number of different times from listeners, and they've just emailed in or maybe made a comment, has been, what happens if I don't have great credit or I don't have a lot of my own money to put into a deal? Is financing still possible? And if so, where should I find it?
I don't like saying things are impossible, but I will say it's going to be very difficult. Just to shoot it to you straight, if you have terrible credit, you need to be working on your credit before you apply for something much larger. Honestly, chances are if you have terrible credit, you're not going to get approved for traditional lending anyway. Now we can talk about all of the other like creative things that you could potentially do. But speaking in terms of traditional lending, I don't know if it would be worth your time depending on how terrible your credit is. Now, as far as a nest egg, if you don't have a lot of money saved up, I have 2 book recommendations for you. One is Investing in Real Estate with Little or No Money Down by Brandon Turner. Again, Bigger Pockets. Thank you very much.
Beardy Brandon, let's go.
And then the second one is How to Buy Bank-Owned Properties for Pennies on the Dollar by Jeff Adams. I have these links. I'll send them to you after we chat, and you can put them in the show notes.
Cool. That'd be huge.
So those 2 books are really helpful on those 2 topics.
Okay. So as far as getting into a property, let's say someone has good credit, they've got a little bit of money that they can put down. What does this look like? I mean, if someone came to you and said, Lindsay, I want to buy a venue, and whether it was an existing property, or they wanted to do brand new construction, build something from the ground up, what should they have? $100,000 in cash. Let's say they have great, 750, 800 credit. So they have pretty good credit. They have some money in the bank, but what amount of money in the bank is kind of a good starting place when you're thinking about building a wedding venue, especially in this economy?
So depending on what the an overall investment amount is going to look like, traditional lending is typically going to ask you for 20 to 25% of that you're putting down for your skin in the game, right? So you need to have, at the very least, you need to run a market analysis and have those documents with you. You need to have a business plan. When you're writing your business plan, you're going to pull stats from that market analysis and insert it into your business plan. That market analysis is going to be attached to the business plan, sort of like an addendum to a contract. It's like Appendix A in your reference, right? And then the third biggest thing is going to be the pro forma, which again, you're going to reference in your business plan, but also having that detailed spreadsheet to be able to send to them is going to be key. Now we can talk about, actually just rewrote our entire business plan that we sell in our product shop. So talking about like all the key factors that you need to have in there, we can definitely touch on that. But the thing that the point that I want to drive home is any investor, really any business owner, seasoned business owner, when they're going to take some sort of risk, I think that they would all agree with me when I say that as in terms of mindset, you need to be firm in the goal and flexible in the method that's going to get you there. So if you think I would really like to have a $2.5 million wedding venue, and then you go through the funding process, first of all, it is very common in the funding process, especially with traditional lending, for you to hear at least 5 to 6 no's in a row. Like most banks are going to turn you down. Don't throw away that opportunity of being declined. A lot of people get their feelings hurt, get offended, and run away with their tail tucked. Don't let that be you. You need to turn around and immediately say, why am I being declined? Can I schedule a meeting to talk to you? That's typically a loan officer. I want a follow-up meeting. I want to know where I fell short, how I can improve for the next time, because I'm not giving up on the stream, and I'll come back to you after I have bettered this application. When I say flexible in the method to get you there, maybe you don't qualify for the 2.5, but you qualify for 1 million, right? At that point, you're like, okay, how can I reevaluate my business plan? Maybe like dial things back and acquire a property that has a house on it. I have to live in the house until I can save up more money and invest. And my phase 1 dream now becomes phase 3, and that's okay. It's just going to take more time.
Like you said, flexible in the path to actually get you there, but you're still accomplishing the goal that you set out for.
Yeah.
Totally. That makes a lot of sense. I love that you gave the encouragement there for folks. If someone's listening to this right now and maybe they have got turned down twice already, what would you say? 5, 6, 7 times? I actually heard from one person on the Venue Owner series, they got turned down 9 times. So, if you're listening to this right now, watching on YouTube, and you've got turned down 3 times, you got 6 more times to go before you get that yes. So better get out there and keep applying. When you're talking about applying, are we talking about credit unions? Are we talking about, like a bank, like a Chase Bank? Are we talking SBA loan? Like, what are some of the financial vehicles that people could use?
Yeah, so everybody's financial situation is going to be different. I can tell you, when I'm going to personally invest in real estate, and the most success that I have seen with clients, it has been to go to local banks and local credit unions. They're going to know the area the best. There's going to be less of a learning curve for them as far as like the metropolitan area that you're looking in, right? And then I have seen a lot of success with the SBA. I will say that while the chances of having a slightly lower interest rate, they are going to have more paperwork, more hoops to jump through. So if you're patient, if you don't mind paperwork, that might be the route that you go. There is going to be a little more educating on your part on not just like the business venture that you're specifically going on, but the wedding industry in general. And that's your responsibility.
Totally. And especially if you don't have a backdrop, like, you came from the wedding industry where you were already a wedding planner, and other folks I know, they're wedding planners, they're, people who already have that experience. So there's a little bit more of that background, that makes a lot of sense.
Oh, absolutely. I have clients all the time that'll reach out, or potential clients that reach out and they're like, hey, we've been turned down 7 times. I don't know what we're doing wrong. They keep saying like we're lacking experience because we've never been in the wedding industry or owned a business before. And so at that point, they'll bring me on to the team and we start applying for the whole funding process from like the very beginning. Like I review everything that they do, rip it down to the studs, rewrite everything for them, redo their pro forma, and then we pitch again. And it increases their outcome. We might have to pitch 2 or 3 times to different banks, but that's fine. But the point that I wanted to make is that if that's you, if the bank has come back and said, our risk tolerance for you is not so good because you don't have the experience, then either find a partner that does have the experience or lease. Instead of buying a property and building, maybe you're going to lease some downtown space, host some smaller events, micro weddings, baby showers, bridal showers, co-op meetings, host those, gain the experience, put that in your business plan. And while you're gaining that experience, document everything that you're doing, document partnerships, document the relationships that you're making, the networks that you're involved in, document your profit margin year over year. And bring that back to the table and say, look, I took your constructive criticism. I'm back and I've killed it.
Yeah. I have a year lease under my belt. We hosted 30 events. We've got partnership. Yeah, totally. That makes so much sense. Lindsay, you mentioned patience around timing. And, we've been talking about this process. And I think, for anyone who hasn't gone through funding or getting financing for any larger purchases, especially real estate, before in the past, they may not have an awareness around the time it takes. So when you say patience, what exactly are we talking about? How long should people be expected to wait or build into their whole process for the financing? And let's say that there aren't any major red flags. Let's say there's a little bit of experience in the industry, there's 20% down, so there's some of these things. What is the length of time that this financing process takes?
Yeah, on average with a traditional lender, it's going to take anywhere from 4 to 6 months, depending on the loan structure that you're doing. And there's so many different loan structures. And I think that's going to be a part of everybody's strategy going into this in 2023 is getting creative with different loan structures.
Okay. So, and creative with different loan structures, meaning how you create the loan to be able to put it in your best advantage, given the fact that interest rates are a little bit higher, depending on where you're at in the country, the demand might be higher or lower, things like that. Is that correct?
Yeah, that as well as just loan structures in general. So making sure that you're aligning yourself with a very knowledgeable and creative loan officer. So I'll just give you an example that'll put this into perspective rather than me trying to explain all of the different loan structures. I have a client that it's the largest client that I've worked with. They're going after 10.6 million and their appraisal keeps coming in at 8. Right. And they can only put X down. And so they're missing around like a little over 2 million that they need in order to fund the full 10.6. Right. So I got them in touch with a loan officer that I just love with all of my heart. She's amazing. She in a previous life was a wedding planner. And so that educational curve, like that learning curve on doing our due diligence with educating on the wedding industry, we didn't have to do that with her, right? Like it was so nice. But like she went to them and was like, let me take a look at your assets, looked at their assets and noticed, hey, one of your partners, his home is valued at 2.7 million. How about we do a HELOC? And so at that point, they're, it's a couple of different loan structures that they're piecing together. So, but because again, that they were flexible in the method, but firm in the goal, they're getting to where they need to be. You know what I'm saying? So I think it's going to be flexible, get creative on loan strategy.
And then it also sounds like that loan officer is a key piece. of the puzzle and maybe a key piece of the team. Bigger Pockets does talk about this, kind of the teams that you'll need in the different markets. It might be a realtor, it might be a mortgage person, right? It might be someone in construction if you're doing a fix and flip type investment strategy. For venues and in the venue space, is there a recommended team of people that you see folks working with? And maybe it includes you, right? Like maybe you're one of the team members, and then there may be...
Yeah, is this my opportunity to give a plug?
Plug away. But seriously, I'm wondering, like, who else are you working with? You're coming in with your expertise from the industry, from working with all these different clients who do the purchases, but who are the other members of these teams that clients are working with?
Yeah, so I'll talk about the people that I think that everybody needs on their team, and then we'll talk about our team later, but and what we offer. But when you boil it down, right? Like when you're going to, whether it is buy property and build from scratch, acquire an existing venue, or leasing, when you boil it down, it's a real estate investment. Mm-hmm. That's what it is at its core, right? So if we're studying real estate investing, we've already got a little bit of a leg up here. So I get a lot of emails on people that are like, or from people that say, chicken and the egg scenario. What comes first? Do I buy the property first and then go and get the loan? But I need the loan in order to buy the property. But in order to get the loan, I have to know how much the property costs. Do you see, like, it's like just this circle that keeps going. And what you need to be doing is doing your due diligence. You need to get in contact with a really, really good real estate agent. And you need to find out like the average price per acre. If you're looking at acreage, if you're looking at something that's downtown, obviously you need to get a real estate agent that's familiar with that space, especially if you're looking to invest in a town that you don't live in and you don't necessarily know the area that well. So getting those average costs, and then you're putting that information into your pro forma. So real estate agent is going to be key. Loan officer is going to be key. Builder, if you can do your research, a really good build team. Usually build teams come with their own engineers that they like to work with. So structural engineers are going to be really important here. Architect is going to be important. And we're talking about like there's all different kinds of venues, right? So and everybody's venture is different. So if you're looking at acquiring a property that already has a house on it and you want to make your land work and pay for itself, and you want to rent the house out for micro weddings and elopements, then that's great. You probably don't need like all the people, right? So obviously we're using a little bit of some common sense here, but I would say at the very least, you need those 4.
Okay. And as we think about the real estate agent, you mentioned get a really good real estate agent. How do we know if someone is a really good real estate agent, specifically for
references? Yeah, ask for references.
Okay.
All real estate agents should be able to say, like, here are my past clients. If you'd like to reach out to them, Google them, look at any reviews that you possibly can. Make sure that not just the real estate agent, but the brokerage that they're hanging their license under has a really good reputation as well.
Got it. And is this something that you found specific for wedding venues or like larger commercial properties, or can someone who's just a really good, regular real estate agent who sells homes, can they help here?
So really what you're looking for is a commercial real estate agent.
Commercial real estate agent. Okay.
Yeah. I mean, if you're looking for a property that already has a home on it and you're going to use the strategy of I'm going to live in the home and then rent it out, make the property pay for itself, then maybe you could go residential, as long as your county and the property is zoned accordingly and the county approves the usage of that. Then yes, like you might be able to get away with a residential real estate agent. I think I've been saying real estate attorney this whole time. Have I been saying real estate? I've been saying agent, right?
Agent, yeah.
Okay. Sorry, I have a meeting with my real estate attorney soon.
There you go. Real estate attorneys on the brain. Well, and speaking of, counties, land, permitting, things like that, let's kind of dive into that a little bit, because that's a huge, you're totally right. This is a real estate play. It's tricky because it's like a real estate play. It's a wedding play. It's a wedding business play on top of a real estate play. So there's a lot. Yeah. And I think you have to treat them as 2 different things. But when you're thinking about permitting and all of that, I think that maybe can be daunting for some folks to like go to the county, especially if you're in, heck, California, like I am right now. But I know there are other places in the country that are similarly challenging. Who should people be going to first? What should their first stop at the county be? Where is that? Is that some department? What are we looking for?
Yeah. So if you're going to go and talk to your county, usually it's called the planning department. I have seen where sometimes it's called the economic development department. And, in the past, I used to give the advice of, go there and be vague and say, oh, I'm thinking about doing this. What would that look like? But really and truly, you don't have to be vague anymore. I mean, they have so much going on. The truth of the matter is they probably won't remember you from Adam the next time that you come back. So give them your specific situation. Let them know, like, hey, I'm interested in purchasing this property. I haven't pulled the trigger yet. Here's what I want to do with this property. I want to make sure that everything checks out. It's currently zoned as, let's just say, residential. What does the process look like to get it rezoned to commercial so that I can execute this? Or do I live in a super lax county? Did I get real lucky and I don't even have to rezone? Like, they don't care. As long as I pay my taxes, it is what it is. It's my property and I can do what I want with it.
Got it. So understanding, and they'll tell you in that planning department or economic development, they'll say, oh yeah, we have a whole, and you'll kind of get a feel from there. That makes sense. And doing that before you purchase the property is totally huge, because then you don't create a business plan and everything based on this, and then you get into the property and then realize the county's coming after you, for not having the correct permitting.
Yeah, and if you're like me, I am a true blue introvert, and I like to do research before I meet with people, to kind of be somewhat educated and not sound like a complete idiot when I don't know what I don't know, right? Like, which is all of us, but still, you can go onto your county's website, and some counties will have their rezoning process posted on their website for you to take a look at, educate yourself a little bit, have specific questions for them. Can I share my screen?
Yeah, absolutely.
So,
I've actually never tried that on the podcast, so let's see how it goes. And now, 100%, if you're on iTunes, you gotta go over to YouTube now, right?
Yeah, and subscribe to YouTube.
Yes, thank you. Lindsay's on the team.
Okay, so just to preface this, this is something that is going to be in the new version of the Venue Academy 2.0. We have a whole funding section in that course. And so I took a process that I found when I was working with a client. We were going through the rezoning process with the client. And so I did the research on their county's website, and they actually had it listed out just like in text form. So I reformatted it into like a little bit of a flow chart. And so this is what you'll see inside the Venue Academy. It's one of the forms, but it walks you through. So if you take a look, let's jump down here. It says, this is a 4 to 6 month process on average of getting a property zoned correctly, right? So that you can use the property once you have acquired it, if it checks out and you decide, okay, the property is gorgeous, it's worth going through this for. Before you ever even get to planning and zoning, right here, you have 3 weeks of this, which is 3 weeks of paperwork that you're filling out. And then it's getting reviewed. And then it might take longer than 3 weeks because the staff that reviews it might come back and say, hey, we need X, Y, and Z like filed away with this, right? Included in your file. And so then you have to go back and get whatever those forms are for them, resubmit, staff reviews. This might even take a couple of times, right? Like, we're pulling back the curtain, and I don't want to sugarcoat anything here, and I also don't want to be a fearmonger, but just letting you, I want to manage expectations, basically, is what I'm getting at here. So once you get through this, then you're hopping over to planning and zoning. And what a lot of people don't realize is that this part, the very first step, is going to a public hearing. Oh, shoot. Sorry.
Oh, you're good.
The very first step in this part of the application process is you're going to a public hearing, to where if your neighbors aren't nice, they can show up and say, I don't want this in my neighborhood. I don't want this next door to me. I don't want the noise. I don't want the road traffic. We have kids. Whatever their rebuttal is, this is where it gets brought forward. If you survive this, you go through the rest of the process. And then you hop over here to city council, where there's another public hearing. So, and this is an example, right? Like, again, don't want to be a fearmonger whatsoever, but also want to manage expectations here. And everybody's county might be a little bit different. So you may not have like all of these steps. You might have half of these steps. You might have one public hearing instead of however many is in here. Every county is different, but in general, this is the general flow.
Well, this is huge. This is just so huge. I'm maybe everyone, if I can convince Lindsay after the thing, she can just create this into a PDF and we can download it on her site or something. I don't know. Maybe have to twist her arm. But no, that's so huge, like seeing that visually broken out, because I think when you see that and then it gives you as the venue owner, the hopeful venue owner, right? It gives you a anticipation of, okay, this could be a 4-month process. This could be a 6-month process. This could be a 6-week process. Like whatever it is, now all of a sudden your expectations are set correctly. You can game plan what your finances need to look like. If you're juggling doing another job and this as part of the process, you can figure out, okay, what am I going to have to dedicate to this time-wise? And that makes so much sense. Thank you so much for sharing that. I really appreciate it.
Yeah, of course. I hope it helps at least one person listening.
Yeah.
If you find the other thing that I want to add to this is, if you find that you're stuck in the zoning process and you keep getting denied and at whatever point that may be, it might be in your best interest to hire a land use attorney, because they're going to know all of the loopholes. I had a client down in Florida that they were having issues getting approved for the zoning process, hired a land use attorney. He came in and was like, well, we're going to use it and classify it as ag. And he knew like the proper loophole to even document everything as, and he was like, I just need you to plant like 50 orange trees and we'll document it as ag. And they're like, yeah, because that's beautiful for photos anyway. So why not? Yeah. Right. So they can bring a lot to the table too, especially during this process.
Awesome. And especially when it might be a county that is a little bit trickier, maybe there's some more pushback, maybe it's, not in a rural area where, you have more red tape that you have to work through. Yeah, absolutely. That sounds huge. Well, Lindsay, we could keep talking about this for so long. I want to wrap up today with just a question. The clients that you are working with, on a consistent basis, when they end up finding their property, they finance it, they do all their remodels and repairs and everything that, they need. Is there a specific profit margin? Is there a specific number that you guide them towards? Because as someone is maybe doing some mental math right now, or maybe, they're on a napkin or on a piece of paper while they listen to or watch this, they might be saying, okay, I think I have it figured out. I need to hold 60 weddings, and the weddings need to be this much money, and this is, what it's going to be like. And they're putting some of this stuff together kind of as a preemptive pro forma almost to like decide if they should do this idea. Yeah. What is a profit margin or a, number of years that they should be targeting for repayment? Is this like a 5-year thing, 20%, 30% profit margin, more? What's your experience been with the clients that you've worked with?
Again, that's going to boil down to the loan structure that you end up going with. Most of my clients are on a 20-year mortgage repayment loan plan. Some other variables might be thrown in there if they have, like the patchwork quilt example that I gave, if they are getting X number from the bank, X number from a private investor, X number from a family member. So all of those are different structures. So as far as repayment is concerned, those might go at different times, right? For profit margin, I try to get my clients earning a profit 18 months out of the gate.
18 months. Okay, so that's kind of not the finish line, but that's kind of what everyone's working towards as far as when you can expect 18 months. That's huge. That's incredible information for folks. Because yeah, if it's going to be less, that you might want to relook and make sure that's a realistic scenario.
Right. Yeah. Oh, yeah. Yeah. I've had plenty. So we do, one of the offerings that we have is we audit business plans and pro formas before you apply for funding to hopefully save you in being turned down X number of times, right? If we can reduce that and maybe even get you a yes within the first 2 or 3 tries, then that's the goal. So we'll go through, we'll audit the business plan, we audit the pro forma, and we have clients all the time that are like, year 1, I'm earning $500,000. I'm like, we need to have a talk. Like, this is not realistic. I love the ambition, but let's dial it back a bit.
Totally. So 18 months is kind of what you've seen for the clients you've worked with.
Yeah. So that's our personal goal when we're working with our clients, is to get them profitable within 18 months to where they're paying themselves a steady salary.
Got it. That makes so much sense. Well, Lindsay, we're going to have you come back on, I think, certainly. It's been way too long since you've been on the show. I think you were, maybe season 1, maybe season 2. I need to go back and double check.
It was shortly after you started, I think.
Yeah. You were definitely one of the first people on the show, and I'm excited. I'm actually going to put a link to that interview so that folks can go back and check that out if they want, also in the description. But if people want to connect with you, I mean, there's so much that we've been talking about that you do help people with, and you obviously have the new course launching, and you've got a ton of resources for people. If people are interested in reaching out to you and possibly partnering with you and working with you, where's the best place to reach you?
That'll be on my website. It's belindsylucas.com, Lindsay spelled with an A. I'll send you the link to put in the show notes. You can subscribe to newsletter, is where we send all of the information. I am not the greatest at showing up consistently on social media, specifically Instagram. So newsletter is where it's at for sure. And then you're always welcome to email me, which is hello@belindsylucas.com.
That's awesome. Okay, thank you so much. Again, I appreciate you, peeling back the layers a little bit, showing us the screen share was totally invaluable, I think, for everyone. And I'm looking forward to further conversations. We can really dive into some of these pieces a little bit more. But thank you for your time today. I really appreciate it.
Oh, thanks for having me. This was great.
Awesome. And thank you so much for joining us for today's podcast. Definitely go check out what Lindsay has on her website. She's got a whole product store full of goodies and things to help you in the variety of different places that you might be at with opening a wedding venue. And please consider subscribing and sharing this with someone if you feel like it would be helpful. All right, we'll see you guys in the next episode.